Hello, good afternoon, and welcome to today's episode of Modesty's Mortgage Masterclass. How are you, and how has your week been? And I welcome you all to the month of September. It's just 3 months to the end of the year. Can you believe it? Where has this year gone? And I'm sure a lot of people would say, well, I can't wait for 2020 to just come and go already. Some of us are already wishing the year away. Well, that's what it is. It's not been a very good one in terms of health and life, and a lot of lives have been lost, and a lot of families have been left grieving, and people are suffering the effects of it both economically, emotionally, psychologically, and in every single way you can think of. So it's a global thing. But hey, we've got to cheer ourselves up. We can't just keep moaning all the time about how bad things are. Otherwise, you keep yourself down for far too long. So hey, cheer up. If you're alive and you're watching me and you're listening to me, then you have every reason to be grateful, because not so many people have got that opportunity as it is. So that's why I make an effort every week to come here and give you something of a value, something to put a smile on your face, something to cheer about, something for you to learn from. At least while you are alive, keep learning, because that's the best you can do for yourself. So it's another episode of Modesty's Mortgage Masterclass, and this is session number 26 that we're in today, and the first session of this new particular month. We're already in the last quarter of the year, and already a lot of people are looking at January to September, first quarter, second quarter, third quarter. What have I achieved? What have I done? One thing you've achieved, though it's not by your own making, is that you're still alive, and then you've got to make the most of it. Okay, so today we're going to be looking at mortgage approvals and house sale times. Basically, there are statistics that we're going to be exploring today, statistics from two very valuable sources and two very reliable sources that gives us an indication of what mortgage approvals have looked like recently, and how long it now takes on average to sell a house in the UK property market. Okay, so like I promised you last week, I like to be starting sessions now on a very positive note, because here we want to encourage positive vibes only, because we want a positive mindset to everything we're doing. So a lot of the positive vibes will be, the one I gave you last week came from a feedback I got from a Facebook friend who appreciated what we were doing, and he left us a positive feedback, and I felt like sharing that with you. So today again, I dug deep into our Facebook friendship again, and I saw one of the feedbacks that somebody left for us on Facebook, and I wanted to share that again with you, just to say that, hey, people are appreciating what we're doing, and they're urging us to go on, and they're saying that they are loving the value they're getting from what we're doing. So if you want to show positivity as well and appreciation for whatever it is you think that we are doing, if it's had any kind of positive impact on you, feel free to leave us a feedback anywhere on any social media channel, on YouTube, on Twitter, on Instagram, on Facebook, on LinkedIn, WhatsApp, wherever you see us. Just drop us a positive message, and we can share it also with the world, because it's all about positivity now. There is enough negativity going around in the world. So the best thing we can do is to, cheer ourselves up, encourage ourselves, and just get ourselves going again. But hey, it doesn't mean that if you've got something constructive to say to us, even though it's not even though it's not what we're expecting, but it's something that will help us to improve, we'll very much appreciate that. Every single feedback is welcome. So we're not just handpicking the good ones and then sharing it with you. If you have something that, even though it's not something we want to hear, but we want to hear everything, yeah, whether it's so good or it's not so good, if it's a feedback that is constructive, we'll take note of that and work on it. We want to hear from people that are listening to us, because you are the reason I come here every week to do what I'm doing. So if it's making sense to you, and encourage. If it's not making sense to you, if there is something that we're doing that you would like us to do differently, we grow together. So a positive vibe of this week is coming from Ken and Edozie on Facebook. Ken said, this is, by the way, this is a feedback that Ken left for us in July, specifically on the 20th of July, during our Modesty's Money Masterclass episode 38, where we discuss 7 facts about money. If you go to my Facebook page, you can still watch that episode if you missed it. It's episode 38 of our Modesty's Money Masterclass, where we talked about 7 facts about money. Ken said, another masterclass by Ikenna Umezudike, a topic after my heart. You made a lot of valid points there, and there are many valuable lessons in that session you delivered. Thank you very much, Ken. We very much appreciate your positive feedback, and we are really glad that you took out a lot of valuable and valid lessons from that session. And that's the reason we do what we are doing. So thank you very much, Ken and Edozie on Facebook. That's our positive vibe for the week. So let's dive straight into why we're here today. Now, talking about mortgage approvals. Recently, the news, the information we have is that there has been a surge in purchase mortgage approvals. This information is from the Bank of England, a very, very reliable source that will tell us, every month and every period, the Bank of England releases, information generally as it affects different facets of the economy, and lending and banking is, at the core of what they do. Although they manage the whole micro and macro economic policies of the government and of the country, but then they also narrow it down sometimes to things like mortgages and lending in general, and the way banking activities have affected the economy. So the Bank of England have indicated that there has been a surge in purchase mortgage approvals. A surge basically means that purchase mortgage approvals has increased significantly in July, specifically in July of 2020. So you can see that mortgages and the mortgage market keeps thriving since the lockdown has been lifted, and the Bank of England has confirmed that with their report. So the figure suggests that there has been a significant increase in mortgage approvals in July. So what does that figure basically say? It's in July alone, there were about 66,300 mortgage approvals in July alone. That is tremendous. 66,300 mortgage approvals in July alone. Now, to put that into perspective, that's about 700% increase from the lowest figure in May. So as at May this year, we know that with the pandemic striking in March, and then between March and May, the lockdown restrictions and measures were in place. So as at May, in the middle of that lockdown, the mortgage approvals were about 9,300. So between May, when the restrictions were lifted for the property industry, between May and July, there has been 700%. That is 7 times the rate of mortgage approvals in May that has been recorded in July. Now, if you compare this figure to the figure of June 2020, it's a 66% increase. Still significant enough, because in June, the total mortgage mortgage approvals were about 39,900, just close to 40,000. Right? So there has been a 66% increase from June for purchase mortgage approvals, according to the Bank of England sources. Now, when it comes to remortgages, the numbers have not been that, dramatic. It hasn't been that fantastic. But then it's just a slight change between what was done in June and what's done in July. So the July and the June figures hasn't been that much different when it comes to remortgages. So remortgages approvals for July, the figure stood at 36,000 remortgage approvals in July. So, but this does not actually include internal switching, like if you're switching from one product to the other within the same banking or the same lender, these figures are not captured. And this is just figures that are captured outside of the an external switching. So the remortgage approvals, they were 30% lower than the figures in February. Remember, the lockdown, the pandemic struck here in the UK in March, and we went into lockdown in March. So pre-lockdown, the remortgage figures were 30% lower. Hi, Enki. Good afternoon. Welcome. Adetayo, good afternoon. Thanks for coming on, people. So the remortgage figures were 30% lower than they were in February. So obviously, in February, the activities were normal. But July, we're recovering from the pandemic and the lockdown restrictions. Obviously, there was that decline in remortgage approvals. But also, that would tell you that people are more into purchases now than remortgaging, because people are just buying new properties now. Hi, good afternoon. Thank you. So people are buying properties more than people are remortgaging. So the figures are not that much of a surprise. And then there has also been an increase in the gross mortgage lending. So the total amount of mortgage lending in the whole of, gathered from different lenders, the total, and that's the gross mortgage lending figures, according to the Bank of England figures, has hit 17.4 billion pounds in July. In July alone, 17.4 billion pounds were lent to people for mortgage purposes. So that includes both purchases and remortgages as well. So that's remarkable as well, at 17.4 billion. So if we want to put that into perspective and compare, comparatively, how does it compare to previous months? It's a 7% increase from the figure in June. In June, the gross mortgage lending was at 16.3 billion pounds, really. So although if you compare that to the pre-COVID period, before COVID struck, if you compare that, it was about 23.7 billion pounds in February. So it's dropped from what it was pre-COVID. But if you look at the margin between July and pre-COVID, it's not that much. 23.7 billion and 17 billion. Considering what the property market had been through, it's really a remarkable increase compared to what people were expecting it to be. Nobody expected the property market to really be this active and this vibrant and bounce back so quickly, from COVID. Everyone was just predicting doom and gloom. But then we can see that the recovery is well on the way for the property market. So what does these figures mean to us? Let's break it down now. So it basically means that there has been an increase in borrowing. There has been an increase in borrowing in the property industry. So if there has been an increase in the gross mortgage lending, and there has been increase in mortgage approval, and mortgage approval rates have risen, what it means is that people are confident again to go out and borrow, to buy properties. And that can only mean one thing: increase in consumer confidence. And if there is increase in consumer confidence, it gives the economy a glimmer of hope in terms of recovery. Because it takes a lot of consumer confidence to go out there and seek to borrow, to buy a property. And property purchase is arguably the most significant financial decision anyone could make, possibly in their lifetime. Some people, the biggest financial transaction they've been involved in the whole of their lives is buying a property. So it takes a massive level of confidence for people to get up to that stage and say, okay, now I feel confident enough to go and borrow tens or hundreds of thousands of pounds to buy a property. I am confident I will be able to repay it. I am confident I will be able to sort this repayment out. So if that confidence is there, it can only mean that the economy is really encouraging people to go out there and borrow. Because if the confidence is not there, nobody will go out to borrow. Nobody will go out to borrow. So it's an indication of increased consumer confidence. So that's what the surge in mortgage approvals and the increased gross mortgage lending suggests. So, and it also means that more houses are coming on the market for sale, and more sales are being agreed. Because if sales are not being agreed and more houses are not coming on the market, there will be no mortgage to arrange. So people are arranging mortgages to buy properties because properties are coming onto the market. So a lot of people are bringing their properties to the market for sale, and more sales are being agreed. But then it does that's comfortably ties into the demand for mortgage products. Because if more sales are being agreed and more are coming to the market, that means more mortgage deals are also being done. So there is an interwoven relationship between the number of houses coming on the market, the demand for those houses, and then the amount of mortgages being arranged to buy those properties. There has even been stories of gazumping. Gazumping in mortgage terms means a situation whereby a landlord or a vendor would accept a higher offer even after they have agreed a sale with another buyer. So you find another buyer gazumping the previous buyer, offering something higher to the landlord or to the vendor, and they accept it, and then they tell you, hey, sorry, we can't go ahead with that sale again. We've got a higher offer for the property. So that tells you how competitive the market is. That tells you how competitive the environment is, that people are really willing to even pay more than what you have offered on a property to make sure they get that property, because they are confident they can afford it. It's all about being confident in their affordability. So there's even been stories of gazumping. That just tells you that people are really keen on getting property deals done. So it's an indication of increased market activities in the properties and in the mortgage market. And there is also an indication that even August figures will show more of an uptick in property transactions. So which means that there is an indication that the August figures are going to be better than the July figures when it comes to property transactions. The reason being that the full effect of the stamp duty holiday has not really been felt. The stamp duty holiday was announced in July. Remember? So the stamp duty holiday was announced in July, and deals are still flowing in that have not been completed. So by the time the full effect of the stamp duty holiday starts filtering in, the August figures look likely that they are going to be better than even the July figures. That's just a prediction. And then the stamp duty holiday also with the backlogs of deals, because now it's taking longer to process mortgage deals. So, and people are coming out of the out of lockdown and out of the easing the restrictions on lockdown. People had deals that they wanted to do that got stuck in lockdown restrictions. And once the lockdown restrictions were lifted, the backlogs from then are still being dealt with even up till now. So those backlogs are feeding into current activities and current market activities, and they are all adding up to the figures. So with the backlogs and the stamp duty holiday effects yet to be factored in, it looks like these figures will continue to be on the upward trajectory by the end of August and going into the ember months as well. And processing times have been slow. It's taking longer to process mortgage deals, and that's why August would look better, because some of the deals that will go into the August figures are deals that are victims of slow processing times by lenders. So these slow processing times by lenders are really due to the effects of COVID, because a lot of lenders are still operating below capacity. Staff capacity is a serious issue, because a lot of them still have their staffs either furloughed or working from home. So because of that, they're affecting the speed with which they process deals. So because the speed of processing is affected, some of these data, some of these figures go into the next month. So that's why analysts are confident that even the August figures will even be better. So if your transactions are taking too long to process, if you are in the mortgage market and you're looking to arrange a mortgage, if your transactions are taking too long to process, just be patient and calm down. Just understand that the lenders have a lot of backlogs they're dealing with now. So it's taking a lot longer to get a mortgage deal done than it usually takes, which is even the more reason. If you're dealing with a mortgage broker and the mortgage broker requests for a document or information from you, try as much as possible in these times to provide that information and that documentation as soon as you can, because it will help accelerate the process. With the delays that we're experiencing now, if you add to that delay by delaying information or documentation that you should give your mortgage broker or you should submit to your lender, you're doing yourself more harm than good. So it's all about the reduced capacity of the lenders. That's why we're experiencing these delays, because of a reduction in their capacity and their staff strength. Now, by the time the lenders come to full capacity, which we don't really know when that will happen, because as it is, some people individually on their own are not confident enough to go back to the office space and work in the office, because they don't feel safe. So it's all about how people feel and how safe people feel going back to the office. And some people some of their staff are still furloughed. So it's all about how quickly they recall the furloughed staff, or people feel confident enough to go into the office and work again. So it doesn't look like these things are going to change anytime soon. Because it looks like from now to the end of the year, this is what we are going to experience. People are going to be scared of going to work in the offices. Some people are the lenders are going to be operating at a reduced capacity for some time to come. So it looks like this is going to be something we are going to live with for some time, at least till the end of this year. So the other factor that is contributing to delayed processing time is the surveyors. You see, because of lockdown, during lockdown, surveyors could not carry out a face-to-face property survey until the lockdown was lifted on the 18th of May, allowing face-to-face valuations to happen. Surveyors are now having to deal with lots of backlogs again. So it's not every property that the lender can assess without having a physical valuation of that property done. Some properties they can do with virtual valuation and make a lending decision based on that. But some of the properties, they need surveyors to go out there and physically survey and value the property for them before they can make a lending decision. So some of these surveyors have been furloughed. Some of them are not operating at full capacity as well. So the backlogs that they have had to deal with, and there aren't that many surveyors to go around the whole lenders. So the workload on these few surveyors that are available is just so much. So that's also contributing to the delays in the processing and the approval of these mortgages. So one of the biggest threats, to this sustained or to the continuation of this trend in this figure is the availability of mortgage products. Even though we're experiencing a surge in mortgage approvals, and we would want it to continue, but there are challenges, there are situations that are challenging the continuation of this surge. There are situations that are challenging the sustenance of this surge. And one of those challenges will be the availability of mortgage products. Because unlike what we expect or what we want it to look like, as demand for mortgage products are increasing, the mortgage products themselves and the availability of them are going downwards, because lenders are reducing the number of products they are putting out there in the market. That's ironical, isn't it? People want to take mortgage, The lenders the mortgage products are contracting by the day, while the demand is expanding by the day. So it's a big threat to the sustenance of this surge in in mortgage approvals. So it's something that really it has to be dealt with, because it's all about what the lenders put out there. If the lenders do not make the products available, then there will be no mortgage products for people to take on. So it's becoming more and more difficult, for people to find the mortgage products that suit them, especially the higher loan to value mortgages. I mean, if you are looking for 75% or lower loan to value mortgages, you find a lot of them. There's a lot of competition in that sector of the mortgage in the market. There are lots of products available as long as you're looking for 75% mortgage or less. But the moment you come to the high loan to value mortgages of say 80, 85%, 90, 95%, it's almost like looking for a needle in a haystack. It becomes more and more difficult. And that's also why it's affecting first-time buyers a lot, because they're having to come up with more and more deposits. And a lot of them haven't got that much deposit at all. So they just have to put off the purchase decision again to say, okay, let's continue saving until we save enough. And then when would that be enough? So one of the reports by Legal and General is suggesting the increase in activities around the bank of mom and dad. We call it the BOMAD, Bank of Mom and Dad. So we find that families and parents are being more supportive. They are having to contribute more towards helping their siblings or their children or people of their family to buy properties, because first-time buyers are struggling to find products that suit them. And the lenders are just withdrawing those products. They are not interested in taking too many risks. That's the reason. Because of the uncertainties around the economy, the lenders are not very confident about what the economy is presenting or what the economy is going to present, especially with the winding down of the furlough scheme by this autumn. Nobody knows what the government is going to do when the furlough scheme comes to an end. Unemployment is on the increase. More and more companies are laying off staff. The UK has entered recession. So these things worry lenders, and which is why they would like to take a minimized calculated risk when they are lending. So they are not offering that much of high loan to value products, but they are offering more of the low loan to value products like 75% loan to value and less. So that's where the real struggle is. So while the borrowers see opportunity, the lenders are seeing something entirely different. The lenders are seeing risk, because they have to assess the risk and make sure that the risk is worth it for them. Because if the risk is not worth it, then they are in a business to make profits. If the risk is not worth it for them, they are not interested. So while borrowers see opportunity, the lenders are seeing risk. So this explains the reason in the different attitudes between lenders and borrowers in this climate, because both parties are seeing two different things. Okay, so that's what we know about the surge in mortgage approvals as per the information from the Bank of England. Another interesting thing that I would like us to talk about here. Hi, Samuel. Good afternoon. Thanks for coming on, brother. Another interesting thing that I would like us to talk about is the information from Zoopla. Zoopla is the second largest property advertisement or property platform. It's a platform where estate agents, landlords, and vendors display their properties for sale or to let. And Zoopla is becoming more than just a property platform. It's becoming a resource center, a property resource center, because they carry out researches, they provide information, they have articles, they have deep insights into the property market. So they've got numerous tools that helps them to analyze what the property market looks like. And periodically, they come up with information that will help people in the property sector make informed decisions. So when there is an information or statistics or reports from Zoopla, we take it seriously because these are intelligence-based researches and information that is meant to, give us an insight into what's happening in the property market. So what Zoopla is saying at this moment in time is that there's been a reduction in the length of time that it takes to sell a house in the UK. And they are attributing that to the increased demand for properties. So they are saying that increase in demand is actually reducing the length of time it takes to sell a property in the UK. So, and they are saying that that decrease or that reduction in the length of time it takes to sell a property is quite significant. So how significant is it? Zoopla is reporting that the increase in demand right now has knocked off nearly 2 weeks of the average time it takes to sell a property. The increase in demand now has knocked off nearly 2 weeks of the average time it takes to sell a property. That's quite significant, isn't it? If a property takes 2 weeks, nearly 2 weeks less to sell, that is quite significant. So now this figure from Zoopla suggests that from the time a property is listed to the time the status changes to sold STC. When you see the sold STC sign on any property, it basically means sold subject to contract. So it means contract has not been exchanged yet, but sale has been agreed. At that point in time, that property is not yet gone. Okay? At that point in time, gazumping can still happen. The sale can still fall through. The seller can pull out, the buyer can pull out, because contract has not been exchanged. So that's why when you see the sold STC, just means sold STC, subject to contract, right? So when between the time a property is listed and the time the status changes to sold to STC, according to Zoopla, that time frame has fallen to 27 days now, compared to 39 days, which is what it used to be at this time last year. So by this time last year, it took on average 39 days, to sell a property at this time last year. But now, Zoopla is saying because of the increase in demand, that time has slashed from 39 to 27 days. Amazing. So breaking it down, and the other figure from Zoopla is saying that there has been an increase in house prices. House price has increased by 2.5%, compared to this time last year. So the average house price, according to Zoopla figures now, stands at 253,600, an increase of 2.5% from this time last year. Okay, so this also gives lends credence to what we've been saying about the strong performance in the property market right now and the strong demand for properties right now in the UK. So it's strong, that it shows that the demand and the strong demand is continuing. Now, to break these figures down into property types, 3-bed houses, according to the Zoopla, is the fastest to sell right now. So for 3-bed houses, it takes an average of 24 days to sell 3-bed houses, while 4-bed houses takes an average of 29 days to sell, and 5-bed houses takes an average of 32 days to sell from the day they are listed. Remember, these are averages. These are not given. Okay? So when you put your house on the market and it's gone past 24 days and it's 3-bed house, and you'll be like, oh, you cannot say it takes 24 days to sell a property. Why haven't I sold mine? These figures differ from region to region, from places to places, from situations to situations. They are not given, right? They are just average across the whole of UK and the activities measured within a particular period. So this kind of ties into the notion that buyers are favoring more properties with an outdoor space. So when we're talking about 3, 4, 5 bed houses selling faster at this time compared to this time last year, you know, I have said it on this platform before that because of the lockdown, people are tired of staying indoors. And people who want to buy properties now are favoring more of the properties that have outdoor spaces more than, you know, properties that have not got outdoor spaces, you know, like garden, front garden or back garden and all that. Because of lockdown, because people were locked in their properties for 3 months. And people are scared that if this happens again, I don't want to be locked in a property where I cannot go out and receive some fresh air in my garden and relax, you know, and receive some fresh air and sunlight and even some bathe in my garden if I want to. So like an outdoor space becomes something of a value now that people are looking for when they're buying properties, which explains why, you know, the likes of the 3 bed, 4 bed, and 5 bed houses are, you know, selling faster than the other properties. The slowest selling property in that category is the 1 bed. You know, obviously 1 bed houses are not very common now because, you know, as families grow and as people, you know, need more room, they will be needing properties that will accommodate more people. So the slowest then appears to be the 1 bed house, which takes on average about 34 days on average to sell. Although even at 34 days, it's still a significant reduction from what the average was compared to this time last year. 1 bed compared to this time last year took an average of 41 days to sell. So that's still about 7 days knocked off the average compared to this time last year. So what do we make of all this information? What it tells us basically is it looks like the recession has not really affected the housing market's conditions at the moment. The UK is in recession. It looks like the housing market is defying the recession, going by these statistics and going by the figures that are becoming available. And also, the predictions for performance in the property market is showing that it's going to be stronger as the year goes by. If, you know, there is no sign of these things abating because more mortgage applications, more mortgage requests, more mortgage inquiries are coming in. I'm a mortgage broker and I see these things happen every single day. So it doesn't look like there will be a slowing down of these figures, or these figures kind of dipping between now and the end of the year. But hey, we live in a very uncertain time. One policy could change it all. One decision, bad one, could make a whole lot of difference. So, but from what we're seeing, it looks like the momentum is going to carry on, especially as the stamp duty holiday extends into the first quarter of next year. Now, September is a key month for the property market in the UK because students and children are going back to school. So at that time, the UK is going to get closer to full economic reopening because childcare to some people is a major restraint for them to get back to work. So when children go back to school, some people might find themselves, you know, free now to go back to work, and they will want to go back to work and work as they used to before the lockdown. So it's a key moment in the UK economy because it helps the UK to push closer towards full economic reopening. So at that time, many households, there will be a serious reevaluation of housing needs for many households against the impact of recession as well. So you're going to place that side by side the recession, and then they are going to reevaluate their housing needs to see whether, okay, do we make this move now or do we not make this move? A lot of people make that decision at that time of the year. So September is a very key month in the property market cycle in the UK. So, but from Zoopla's estimate and prediction, they are predicting that the momentum is likely to continue into the fourth quarter of this year, which we're already in the fourth quarter of this year. And then, even though the demand for properties have softened a little bit in August, it still doesn't take away the fact that the activities are still strong and are still a lot stronger than expected or than predicted. Okay, so let's talk about the demographic differences in all this. So still on that Zoopla research, the research shows that more homes are being listed and more homes are coming to the market in the more affluent areas of UK, where wealthy people are living. There are more homes coming onto the market. Why is that? So, you see, there appears to be some kind of imbalance among buyers and sellers when it comes to affordability and mortgage availability. Now, these constraints are not equal. That imbalance is there because, look at this, half of the homeowners don't have mortgage on their properties. And a good size of those who are remaining have a sizable amount of equity on their property. So there is some kind of imbalance among buyers and sellers. To some people, affordability is not a problem. Mortgage availability is not a problem. They can afford to move from where they are to where they want to be very easily. They can afford to get the level of mortgage that they need very easily. So it suggests that not everybody seems to be struggling when it comes to mortgage affordability and mortgage availability. And that's where the demographic difference issue comes in, because it's unequally distributed. This problem of mortgage affordability and mortgage availability is unequally distributed. In some regions, it's really a struggle. In other regions, it's not that much of a struggle. Where there are more wealthy people, where there are more affluent people, is not that much of a struggle. So that's that imbalance that exists in in the demographic sense. Basically, geographically as well, it's not evenly distributed. So why there are more properties coming onto the market from the more affluent areas? I'm going to tell you why now. You see, activities in London and South East, which is where you see most of the affluent people in the UK. London and the South East are considered a more affluent area in the UK. In the last 5 years, between 2019 and 2015, there has been a reduction in house prices, going by reduction in demand for properties in that area. Okay, so that reduction is about 20% drop, in the volume of house sales in that affluent area. Between 2019 and 2015, there has been a 20% drop in house sales volume in that area. So what this has done is that people's appetite to buy properties in those areas have not been very strong, because they feel that the house prices in those areas, houses in those areas are overpriced. So what it has done is that it has now led to some kind of a shift and repricing and rebalancing naturally of properties in that area. So we have seen a reduction in house prices in those areas because the demand for properties in those affluent areas have not been that strong in that last 5 years. Now that repricing has now brought back the appetite to buy properties in that area, because activities in that area in the last 5 years, between 2015 and 2019, this is according to Zoopla statistics, activities in that demographic area or region have dropped in the last 5 years. People feel that they are priced out of those properties, and the appetite to buy those properties are no longer there, and they are kind of shifting away from those areas and going to places where they feel they can get more value. So house prices in that area have naturally corrected themselves a little bit in the last 5 years. And then people are now realizing that properties there are becoming a little bit more affordable again for them to buy, and therefore activities have returned back to that area, which is why more properties are coming to the market from those affluent areas right now. And then if you now throw the stamp duty holiday into the mix, you can now see why more homes are coming to the market from those affluent areas. Because now for properties that are worth up to £500,000, no stamp duty is payable. So people will now feel, well, with the stamp duty and the house prices in those areas coming down a little bit, yeah, there's been a little bit of repricing, yeah, I can give it a go again now. Right? So that's why there are more activities and more properties coming to the market from those areas. So a look at the economy and the economic outlook. You see, when we look at the economy now, because you cannot divorce the economy from the property market. The property market is a strong integral part of the UK economy. And you cannot discuss the UK property market without discussing the economy or without looking at the economy. So let's have a look at the economy, and let's, what does the economic outlook look like? Now, the UK economy has sharply contracted, due to the pandemic. The pandemic has done a great deal of damage to the UK economy. That we cannot deny. The UK has officially entered recession. That we cannot deny. Unemployment is on the increase. That we cannot deny. More and more companies are laying off staff. That we cannot deny. These are all sad realities and facts, that the UK economy is dealing with and is grappling with. But hey, in the midst of all that, consumer spending has bounced back. Yeah, people have started spending again in the UK, because all through the lockdown, you can only, spending has only been online. People don't really feel confident going out to shop, or you can only go out to do your basic shopping. Lots of shops, fashion and retail shops, restaurants and all that, they were not open. So consumer spending is gradually coming up again. And then Rishi Sunak did something very smart in August when he introduced the Eat Out to Help Out scheme. What that scheme did was that it gradually eased people into a normal kind of lifestyle of going out again. So many people who are scared of coming out of their houses, because of the Eat Out to Help Out scheme, they ventured out again. They started mixing up again. They started, they went to the restaurant, they ate out, they had fun. All of a sudden, life feels good again because of that. So throughout the month of August, people were going out to eat at half price in most cases, and the half price paid for by the government, and then while you pay half price, I couldn't believe how affordable some meals were for me. I took advantage of it, not the whole of August though. I did partake in the Eat Out to Help Out scheme, and I couldn't believe how cheap it was to go out and eat out. Myself and my wife, we had a really good time taking advantage of that. And we had, we explored different restaurants, different places, went out, and to some of the restaurants we went to, we couldn't even walk in and just sit down and eat. Some of them have been booked and fully booked even the week before. And even the week, the coming weeks have already been booked as well. So, I said to my wife, what are we doing? People have confidently booked up all the spaces in virtually all the good restaurants around. So we still managed to find some good restaurants that we went to sit down and eat. And then some of them we had to now book a day or two before, because that became the norm. Otherwise, you can't go in and eat. So that basically gave people confidence to go out and mix up again. So, and by going out and mixing up again and eating out to help out, they are now confident to go out and shop, because they can now go out and basically say, well, I've gone out, I've come back, nothing happened, I'm just going to get my mask on and go and do my shopping. So the fear of going out, has been dealt with simply by that singular act of brilliance by the government. So I really give the government thumbs up for that. Now, this has really helped consumer confidence, because consumers need to feel confident for them to be able to spend. So the next big challenge for the economy right now will be in this autumn, when the furlough scheme will be unwound. The unwinding of the furlough scheme and other government supports this autumn, by the time they come to an end, that will be the biggest challenge for the government and for the economy. How the government handles that furlough scheme after October will determine a lot, and how people react to whatever the government policies are after the furlough scheme has been unwound, will go a great way in determining what exactly the economic outlook will look like for the rest of the end of the year and into the next year. So it will be a true test of the strength of the UK economy. But generally, Zoopla believes that this year the property market is going to end between 2 to 3% higher than it started in the short term. They believe that the property prices, house prices, will end the year between 2 to 3% higher than it started at the beginning of the year. We are yet to see that. So that's basically what the economic outlook is like at this moment in time. So I thank you very much for being part of today's episode, and I hope this has been useful for you. And if you've got any questions, please feel free to send me a message. If you've got any feedback for us, please feel free to leave us a feedback, a message on any platform you're watching this, and get in touch with us and follow me on Twitter, on Facebook, on Instagram, on LinkedIn, and feel free to go to my YouTube channel. Just search my name on YouTube, Ikenna Omezudike. There are loads and loads of backlogs of, back catalogs of our contents that are on YouTube. You wouldn't want to miss any of them. There are loads of things we have discussed, both in the Money Masterclass and the Mortgage Masterclass, that you can take your own time to educate yourself on by just going on to my YouTube channel. Do not forget to subscribe and turn the notification on. And hey, we do not charge subscription fee. It's free of charge. Just hit the subscribe button, subscribe to our YouTube channel, because we keep loading more and more contents onto that channel every now and then. Until then, I'll see you again on Monday for our Modesty's Money Masterclass, and next week Wednesday we're going to be back again with another bumper package of Modesty's Mortgage Masterclass. Take care, goodbye, God bless, and stay safe. Bye now.